Hello and welcome to the Future of Real Estate down here in sunny Southwest Florida. Today we're going to give you our November Southwest Florida real estate market update. So I pulled up inventory as of October 6th and we have about a 6.17 month supply of inventory, and of course it varies by price range. But if you go back to June, it was at 7.43 months. So the inventory has actually come down. I want to take you through a couple other slides here. This is the Ellis Team Current Market Index, and it has been rising a little bit. So as you'll know, the lower the number, the better it is for sellers. The higher the number, the better it is for buyers. And it's been going up a little bit, so a little bit of advantage to the buyers as more inventory is coming on the market, so that makes sense. Let's look at our total pending sales. They've been going down, but they typically do this time of year, but the trend line is still down. Every year, the pending sales have been falling. And that's indicative. Our prices have been falling, inventory's been going up, interest rates are up, the economy is not as good as it was over time, so after inflation and whatnot, so that chart makes sense. Let's look at the supply and demand. So I'm going to break it out this way. This is our supply over time, and this is the demand. That's basically the pending lines. And you see there's a big gap there right now, so we'll cover that in a second. But back in 2022, we actually had more demand than we had supply. That's why prices were going up so much like they were. And then that changed in about May or so of 22, and then here's where we are now. So it's come down from where it was, so that's a good thing. We're about a little over 7,000 homes, 7,200 homes or so on the market, off from our high, which is over 9,000 homes. I could probably get you the actual number here. It was about, well, it's not giving me the actual number right now. But anyway, so let's look at the gap. So what is the gap? The gap is the difference between these two numbers. So you would expect the gap to be highest about here or maybe even here in April of 2025. So let's go look at that. And actually the gap was probably highest in about January, February of 25. And it was still pretty high in April, but coming down a little bit. And here's where we are now. It's come down considerably, but it's going back up again. And like I said, that's due to inventory increasing again. So let's look at our inventory. These are the single family weekly inventory counts. Big rise. A lot of sellers took the properties off the market. And now it's starting to rise again because it's fall and sellers are putting homes back on the market. Now let's look at the condos. Pretty similar graph. They shot up about the same as the single family homes, down again, and then they're rising again. So let's look at home sale prices. They peaked around $450,000 at $447,500 back in February of 23. And look where they are now. They are about $375,000. They're up from $370,000 the month before, but down about 2.1% from last year. So if I go back to September of 25, they were $382,900, and now they're at $375,000. So that's a 2.1% drop. Now we're going to look at just the 12-month pricing. 12 months ago, they were $382,900, and we know they're at $375,000. Look at the average. The average was at $489,842, and now the average is at $489,842 compared to $489,842. So that number is wrong. I've got an error in my spreadsheet because that number here should be $571,454, and that was a 4.8% increase. So I somehow have input an incorrect number there. So it's going to be up here a little bit. So prices went up just like the median prices went up. So we'll go ahead and get that corrected. See, we're not perfect. We do a lot of analysis, but I knew something didn't look quite right. So I was able to catch it because we do so much analysis quickly. These are the official listing inventories levels, and look where they were in 21. This is put out by the the Florida Association of Realtors. They vary slightly different than ours because I pull from our local MLS. They've got access to more MLSs. And whatnot than we do. I pull from two, but I don't always merge each one, and that's a lot of extra work. So we're within a couple hundred here. So So that's interesting. Let's look at our homes closed and you see where we are. The yellow line is where we are in 25. So what year does that most closely resemble? Well, we were higher than 2019 here, but right now we kind of resemble 19, but I'm also looking at the orange line, 2023. I think we kind of most closely resemble 2023. So we'll keep our eye on that. And then these are sales prices from 20 to 25. Now, if you bought back in 20, you're still golden in January of 20 because prices are much higher than they were. People are complaining, oh, my home price is down. Well, it depends when you bought it. If you bought in 19 or 20, you're still doing pretty well. Same with the stock market. Sometimes you're doing well, but it's all relative, right? Let's see what else we can talk about here. Dollar volume. I don't have final year dollar volume numbers out, but I will tell you this. The dollar volume was up 19.9% in September. Now, some of that was Hurricane Helene hit the area peripherally, and it did mess up some closings. And then Milton hit later in October. So I wouldn't be surprised to see our October closings, when they're officially released, again higher like the September closings were. And then finally, I'd like to end with a statement about what's going on in the market right now. So I'll have you pan in on me. And here's what we're seeing. We have seen since the election in New York City, a lot of capital, actually it started before the election, was coming into Miami, the Palm Beach area, even parts of Texas. And we have seen a lot of Miami people coming over here because it's getting so darn unaffordable over there. Fort Myers, Cape Coral, Naples, we're kind of the big secret because our values went down when the rest of the state didn't do that because of the hurricanes and because of what we went through in 22 and in 24. So now we weren't hitting 25. We're kind of getting back to normal. Insurance costs are starting to come down, both on homeowners, on flood. Well, not so much flood, but homeowners, car insurance, everything's starting to come down. So that's good. But we're seeing all this money coming in. So we wouldn't be surprised if we see a leveling off in our market. And I would encourage buyers to not wait too long because I can't tell you if we're at the bottom of our market today, 6 months from now, or even a year from now. But let's pretend like it's 6 months from now. We're getting close. And as long as we're getting close, if you buy a couple months before the bottom of the market, you're going to do better than if you buy a couple months after the bottom of the market. Why do I say that? Because when the bottom of the market happens, everybody knows it's here. And the buyers jump in, the sellers start raising prices, they get confident, interest rates are probably coming down, a whole lot of things happen, and you don't have as much choice or negotiating leverage. So I would definitely, if I'm a buyer, I would want to be buying right now. Lock in these prices today because we are a bargain in Southwest Florida. And then when those interest rates change down the road, then maybe do something about that. But you can't have your cake and eat it too. You're not going to get rock bottom prices, maximum negotiating leverage, and rock bottom interest rates all at the same time. We've saw that movie before and we know how that ended up. So I think now is a really good time for buyers to get in without giving away the exact date and time and veracity of the market as to what's going to go on with the market. So that's our tip for the day. That's your Southwest Florida real estate market update presented by the Ellis Team at Keller Williams down here in sunny Southwest Florida. Thanks for tuning in.
The Ellis Team at Keller Williams is a family affair. Always call the Ellis Team. They'll handle you with care.